So thanks again for joining us. My name is Karen Corman, and I have the privilege of being the Executive Director of the UIC Alumni Association. Welcome to the UIC Alumni Exchange Series. We are grateful you are joining us as we work to bring you a variety of programs and topics that you can explore, connect, and even escape from the everyday with a community of UIC alumni, faculty, staff, experts each week. You'll hear me say this a few times today, but I encourage you to visit go.uic.edu/alumni exchange for the latest and greatest programming. And with that, I'm excited to start our program this afternoon, featuring UIC alumna Angie Palaio. Angie is a 2011 graduate and has become an accomplished real estate consultant. She will talk us through the home buying process and answer your questions about the best approach. Thank you so much, Angie, for being with us here today, and I'll turn it over to you to begin the program.
Hello, everyone. Good afternoon. Again, my name is Angie Palaio. I am a graduate of 2011, and I currently reside in the University Village area too. So this invitation was just extra special. I recently also became a first-time home buyer, May of 2020. So this really hits home. All the topics we're going to cover, from the journey of becoming a first-time home buyer, the uncertainty, the steps, how you navigate the process. So I hope this is helpful. And again, if there are any questions that we don't get to cover, we will have those on the website as well. So again, thank you so much. Let's kick this off. So there are many benefits of becoming a homeowner. Again, it's anywhere from building equity and wealth, some of the tax savings you get from specific tax deductions, the security, ability to build good credit in the long term, as well as just, the pride of being a homeowner. You can do whatever you want to that piece of real estate, any updates, and it doesn't really confined to any regulations by a landlord. So there are a lot of benefits. I realize there are uncertainties, like I previously mentioned, just taking that first step, but I can guarantee you, being a first-time home buyer myself, the benefits are just immense, and it's a great feeling. It's a great accomplishment. So with that, I will kick it off to, it's a bird's eye view of the home buying process, the steps, the different stakeholders that you have to talk to and work with along the process, and what are certain things and call outs that you should be looking into when taking such a big investment and such a big step in your career, in your personal life. So the first step is determining your buying power with the lender. You will meet with the lender, a mortgage lender, who will review a number of elements and variables. Some of these variables are, income, your employment history. When I say employment history, is they don't like to see someone who's, bouncing around from job to job. They like to see there's a sense of security there. They there's a certain threshold, a certain minimum of credit score that you need to have in order to qualify and be pre-approved. They look at how much money you have in your savings account, that will then determine if you're able to put a certain down payment. It will determine what type of loan and program you qualify for. Some of the most common loans out there are a conventional loan, an FHA loan. An FHA loan is more so, it's backed up by the government. So, you're putting less down payment. There are more flexibilities with that type of loan, just because it is backed up by the government. And then there's a VA loan, which, for any veteran, they get a lot of benefits, those type of loans. So it's always important to connect with the mortgage lender, who will walk you through the steps and the programs that align to your specific needs and circumstances. And then once you speak to a lender and you get, let's say you get pre-approved, the lender will tell you this is the sales price, this is how much you're going to have to put down. They'll give you a ballpark of closing cost, just so you can start kind of aggregating all that data information and having it in your back pocket as you go into the world of real estate and you start navigating and looking for the perfect property. So after this, you, like I mentioned, you will meet with your realtor. And there's a number of realtors out here in the city, whomever you feel comfortable working with. But basically, the role of the agent is to, I like to call it more of like a project manager. The agent will ensure that we get you to the closing table. The realtor is responsible for communicating back and forth between the attorney, the inspector, the selling side. So they are more so ensuring that the process is streamlined, and of course getting you to the end goal, which is the closing table and making it to closing. So when you meet with your agent, you will discuss criteria that's important to you. Criteria such as a timing perspective. When are you looking to buy? Are you currently renting? And if so, when is your lease up? Are you, if you're already an owner, is this going to be contingent on the sale of your current home? But for this particular case, we're speaking first-time home buyers. So this would more likely be if you're currently renting and the timing from that. And if you don't want to re-sign a new lease. So understanding timing, understanding your price range, the location of preference. Are you looking at specific size of a home, number of bedrooms, bathrooms? Do you want a finished basement? Or are you looking at a condo like myself? I purchased a condo here in University Village. So there are different elements that go into that. When you're purchasing a condo as opposed to a residential home, you will look into certain variables that come into play. The first one being HOA. The HOA fees is basically you are part of an association and you pay, aside from your mortgage, you are paying what we call HOA fees. And these fees cover a number of things ranging from landscaping, any amenities. For my particular case, I have a gym in my building. My HOA covers my electric bill, my cable bill, my internet bill. So when you talk to an agent, it's important to kind of have an understanding of all these factors that come into play, and additional costs that will come aside from your mortgage. So once you tell your agent what your dream home looks like, where it's located, timing wise, your agent will set you up on what we call an automated search, and an automated search that will be sent to you with any existing listings or any real-time new listings. And then from that point on, the fun part starts, right? It's going out there and touring the homes. Please note that a buyer's criteria may change after showings. In a perfect world, the buyer will land the home that meets all their needs and their wants and whatnot. But it's important to note from historical experience that a buyer will most likely have to compromise on their criteria and see what's most important. For some people, the location is most important. Is it accessible to the CTA? Is there parking? Is it convenient to walk to a grocery store? For other, large families, they really care about the room and the space. So it's contingent and dependent on everyone's each situation. But just know that sometimes it comes down to compromising. So let's say we already went through the process of touring a couple homes, whether it's open houses or private showings, and you found the perfect home, the perfect property for you. Then we will go into submitting an offer. And from that point on, it's determining the value that you associate to it. How much do you want to offer for that property? Is it asking price? So let's say a condo is listed for 200K. You will most likely work with your agent and look at something called the comparable market analysis to determine what is the value in that particular location. What have other properties in, let's say if it's in the University Village, for example, where I live, I will most likely look into condos that have sold in the past 3 to 6 months in my community. And from that point, I will look into the variables and the criteria. Is it also a 2-bedroom, 2-bath? How much did that property sell for? Did that property have more updates than the one I'm looking at? So just components that help you determine what you think the price tag is for that property. So let's say you already determined the price, your offer price, then we will go into determining when you want to close. Is it a 30-day, 45-day from offer? Again, it's all contingent on each individual's motives and their timelines. And then also we have something called the earnest money, which earnest money is a deposit in good faith. It's a deposit in good faith that you're showing the seller that you are a motivated and a serious buyer. Again, this earnest money is held in what we call an escrow account. So it's a separate account that will be held there throughout the process until we get to the closing table. Let's say once we get to the closing table, everything's fine. That earnest money will be put into the overall closing cost. It will be put into as your down payment. So that earnest money is just held in a separate account, just in good faith, to make sure that it's protecting both the seller side and the buyer side. Of course, in a perfect world, right? There's instances where a transaction falls through, whether it's inspection items that came back that, the house needs a lot of work, it has a lot of damage, or let's say the appraisal came back and the bank determined that the sales price is not worth what you're paying for it. So those components always may break a deal, right? So when a deal doesn't go to the closing table, that earnest money, more than likely, I can say 100% of the time in my personal experience, goes back to the buyer. If for some reason the buyer got cold feet, with something that didn't have to do with the appraisal or the inspection or the attorney review, then that money may be jeopardized. Again, it's just contingent on each specific situation and scenario. So let's say we submit our offer with what my buyer wants to present, the earnest money, the closing date. We submit it to, I in this case would submit it to the seller's agent, who by law is responsible to present all these offers to the seller. Let's say the seller comes back to us, to the buyer side, and counter offers. So let's say they weren't happy with our offer. They may, counter by maybe bringing down their sales price a couple thousand. Maybe they will accept it, but there's always room for counter offer and for negotiations. So let's say your offer is accepted. Congratulations. Now things move really quickly and rapidly. And from this point on is when we bring on everyone else involved in the process. Again, you will have to get a cashier's check with your earnest money. We will put that in an escrow account that will be held until closing date. Then we will have the inspection. This is honestly my favorite process of the journey, of the home buying journey, because here the buyer hires an inspector. a home qualified inspector who will come into the property, basically dissect it, make sure that it's not falling apart, making sure that there's no history of flooding, radon, lead-based paint, components that may be affect, someone living in the property, whether it's health-wise or, again, if it has any structural issues with the property. So let's say the inspector conducts the inspection report and they found a running list of items that need to be addressed or repaired, or maybe even just present a credit, which is money that the seller would give the buyer. So they will give you an inspection report, and then you basically go through the inspection report, and then you determine what you want to ask for from the report. Do you want the seller to make all these updates to the property, or do you just want it in form of a credit? And there are certain thresholds where you can't, dependent on your loan, you're capped at certain thresholds. So let's say a conventional loan, I'm just giving a ballpark, but let's say it's 4% of the sales price. One of my current buyers, she's buying a condo, and the inspection came back with a lot of issues. We were able to get her $5,000 in credit that she will be applying it to her down payment. Again, you can either ask for repairs, or you can ask for credit, which will be given to you at the day of closing. So let's say we finished what we call the inspection and the attorney review. The attorney reviewed the contract, made sure that everything is aligned, making sure that you're getting basically everything based on the village, any tax prorations that you need to get. So let's say the attorney review has finalized, and now the most important, I would say the most important step in the process is the financing process, is when the bank, like I mentioned, sends an appraiser to the property to determine the value of the property. A lot of the appraisals right now are being conducted what we call a desktop appraiser, where they will basically just do it remotely. They'll take pictures, they'll take comparables, and determine the value. In other cases, the actual appraiser will go to the property and check it out. Because of COVID, a lot of these work being conducted remotely. So let's say the appraiser comes back and says, yes, this is worth what you're paying for. Then it goes to another round, which is the underwriting, the insurance. And again, I am not a financial expert here. These are just giving you general view and general steps of what this process entails. Again, the agent will monitor the transaction. Anything that the buyer has questions on, making sure that any documents are being provided to the correct parties. So when I say that there's a lot of cooks in the kitchen, or a lot of checks and balances, it really is true. There's a lot of checks and balances that protect both the buyer and the seller. I think I feel comfortable today saying that both the buyer and the seller in the real estate world are protected. I won't go into history, but many years back, there was a lot of corruption in the mortgage industry, in the real estate industry, where buyers and sellers got screwed, for a lack of better term. But in this day, there's a lot of checks and balances that protect the buyer and the seller. So let's say we already went through all these steps, the finance step, you're clear to close, and now we are getting ready to your day of closing. The very last step here in the process is a final walkthrough of the property. So if, let's say, you asked for certain items to be updated or replaced based on the inspection, or let's say that you didn't even ask for any updates, you just got the money back, but the seller has now, left the property and moved all their belongings out, we will go back right before the closing. Most likely it's conducted the morning of closing. Sometimes it's conducted, a day before closing. It's just to check that the property is still in the condition that it was when you placed your offer, that no damage was caused when the seller moved out their property. If let's say they had a television fixed to the wall, are there any holes left? Did they make any damage to the floor? Issues that can happen. So let's say that the final walkthrough is great and the house looks amazing. Then the day of closing, your mortgage lender will tell you a day or 2 days before the closing how much money you have to bring to the table. You will most likely bring a check, a cashier's check, in the amount that you will need, already taking into account the credits that you're getting, the down payment that you decided to go with. Was it a 3% down payment, a 5% down payment? Or if you're a VA loan, then sometimes you don't even have to bring anything as a down payment. So you will get all that. And then the day of the closing, that's when your attorney will basically go over, it's like a pack of like 60 pages, and the contract just kind of outlining everything. He or she will go over the contract in very detail and ensure that you're understanding everything that you're signing. And then that's when your keys are handed over to you, when you just, the next steps, getting your insurance, getting the movers in. So in a nutshell, that is the process of becoming a first-time home buyer. Now we can kick it off to questions.
Great. Thank you so much, Angie, for that wonderful overview. We've had lots of questions and I encourage people to keep sending questions. Our team is pulling them together. So let me start. Well, before I start, as a reminder, we've had a few questions about this. This recording will be available at the Alumni Exchange website, which is go.uic.edu/alumni exchange. In about approximately 10 business days. But with that, let me start out with what are the requirements for mortgage approval? You talked about a down payment. Is there a particular credit score that people need? And I know you're not giving exact science numbers because things fluctuate. So
I'm not the expert in the financing realm, but I can give you an overview. I've seen 650 be a minimum score for an FHA, which again, I mentioned the FHA is the government supported loan. So it can be as low as 650. In some cases, it may be lower. Those variables do change day to day, just as interest rates change. And just to give you some overview, right now, we would consider this a seller's market just because there are more buyers out there than there is inventory. So we've run into situations where it's always a multiple offer situation, which is great for the sellers, right? Because they're getting top dollar for their properties. But the reason why there are so many buyers out there right now is because of the historic low interest rates. Again, those change day to day. I talk to my lender on a weekly basis, and he was telling me that the interest rate went up from I think he was like at 2.7 in 1 week, and then the following week it was a 3.3. So they change daily, and you basically have to lock in your interest rate with your lender if you think it's a great interest rate. When I bought my property, again, I am open to giving you my situational experiences. When I bought my property here, it was a 3.5%. Now, other peers that I work with or friends that I know who also bought, they locked in a 2.8 interest rate. So those variables change. But back to your question about the credit score, I would think it's safe to say that if your credit score is over a 650, it's good. If you have something under than that, let's talk. Meet with the mortgage lender. They will provide you the steps that you need to take to improve your credit score. And sometimes those steps are you can honestly make those changes in like a month, where sometimes it's as easy as extending your line of credit. You know, talking to your bank, or if you have a credit card at, let's say, Nordstrom or whatever, calling them and say, hey, do I qualify for a line extension? Basically, like whatever you're approved, they'll extend it. And factors like that help improve your credit score.
Great, thank you. So I know that you are, you're not the loan expert, but we've had a couple of questions about the governmental loans and the FHA loans. Where would you recommend people go to get additional information specifically about those loans?
So there's a plethora of sources online. There's a lot of banks. The bank that I use, I will give it to you just because you guys are asking, is the Federal Savings Bank. They specialize in FHA and VA loans specifically. And then again, there's other lenders that will specialize in more conventional loans. So like a Chase, the Bank of America. It's always contingent on your needs and again, the programs that make more sense to you. But if you want to start off, you know, looking up the Federal Savings Bank, which is a bank that I really trust, and I've worked on a lot of those FHA deals. And I am more than happy to send a few more sources at the end of this presentation to help you navigate and kind of help you with like a blueprint of where to go. There's a lot of information out there, and I understand it can be very overwhelming. So it's always important also to shop around. I always tell my buyers, like, shop around. Like, I can refer you to this lender, but if you think you're going to get a better interest rate, or someone else is going to help you, if your credit score is not that high, it's always important. I always say like 2 to 3, consult with 2 to 3 lenders, just to make sure that you're getting the best deal and the lowest interest rate out there.
It's funny because that was actually the next question that came in, is that should you shop around? And you perfectly answered it. Are there additional programs that you would recommend for first-time home buyers? Classes people should go through or whatnot?
There's a lot of programs for first-time home buyers. Again, it's very case by case depending on your income, but I've worked with a lot of lenders who are always providing credits to first-time home buyers. I know the state of Illinois provides a lot of credits. I mean, I can't really speak intelligently to the type of programs, but I know there's money out there. There's money out there that will help a first-time buyer with their closing costs, with their down payment. It's just a matter of like, do you qualify, right? I think you have to be under a certain income level, but there's money out there that the government will grant you, so you can give it as down payment or help you with the closing costs.
Oh, great. How long can the process take from speaking to an agent to closing?
So the standard process for a closing, and I'm talking more like the financing aspect of it, can be from the point of, let's say you find the perfect property and you submit an offer, and it gets accepted, to the closing. It can be anywhere from 30 to 45 days, based on how fast the bank can expedite the whole process. Again, this is just basically contingent on if the buyer needs more time. If the buyer wants to close in 2 months just because of, you know, timing with their lease or whatnot, it can sometimes take 2 months. I've had situations with buyers where I started showing them last year, but there was no inventory out there. They just didn't find the perfect property, and they were not in a rush either. So again, I started showing them again this year, and we just got under contract. So that's basically contingent on if the perfect properties out there for you, your motives, the buyer's motives, but it can be anywhere from a month to maybe 6 months in finding the perfect property.
So this is actually, I think, a good follow-up question that had come in beforehand. And the person is asking is currently paying rent. They're asking, is there a cost benefit to buying a house now rather than waiting for the housing market to cool? They're implying perhaps next year.
Yeah, so that's a question I always get, because when we look at properties now, they're selling at their sales price. They're selling the value has not gone down. Okay, the value of properties has remained consistent even with this pandemic. The only reason why there are so many buyers out there is because of the low interest rates. So when you think of that factor of the low interest that you're paying, with, like, let's say you're getting a property, it may not be the best deal out there, but the fact that you're getting a low interest rate, so it kind of becomes like a situation of like, okay, would you rather take advantage of the low interest rates now and maybe find a property that's not the best deal, but again, it's going to even out and balance out? Or do you want to wait and maybe interest rates will go up? So it's kind of like a situation where you need to balance out pros and cons to each situation.
Great. A question came into the chat about why would an inspection occur after an offer is accepted and not during negotiations and the house viewing period?
Yeah, so that's actually a really good question. If you look at it from like a seller's perspective, a seller's not going to want to have 1 million inspections conducted, before they even get an offer or before they go under contract. So I guess this is again where I say sellers always protected, buyers also always protected. The inspection, you're basically bringing a stranger into someone's property to poke holes and check what's wrong with the property. So yes, an inspection is after you go under contract. But again, it's one of the checks and balances. So let's say that you're paying an inspector. I'll give you again a ballparks. For a condo, an inspection is about $250. For an actual residential property is about $500. So the buyer is paying an inspector to come into someone's property, check everything. If, let's say, for some reason the buyer isn't happy with what came out of that inspection, that's your chance to walk away. So there's a lot of chances that the buyer gets to walk away. So that's protecting the buyer. You can walk away, you can get your earnest money back. So you're not really locked into anything after you go under contract.
So actually that was a follow-up question of that. So the offer can be revoked if whatever comes back in the inspection
Correct.
feels challenging, or is that feels challenging to the buyer where they say, this looks like this is going to be too much work down the road, or are there certain rules around that?
Yeah. No, this is honestly based on like the buyer and what the buyer determines to be a lot of work. Like some buyers are looking for more turnkey properties where they just want to move in and like maybe clean the day of closing and move in all their items. Others are maybe looking for that. They're looking for a flip or something where they can build more equity. I can give you an example. One of my situations was one of my buyers was looking for a house. They were looking more for a turnkey property. But when the inspection went through, we saw that the roof was basically falling apart. And the lifespan of a roof is anywhere from 15, 20 years, whatnot. But this particular roof was already very old. It was going to cost a lot of money to fix it. So that's when my buyer decided, like, no, like we don't want to go through the trouble of repairing a roof. That's a lot of money. So my buyer actually walked out of the deal.
It's interesting to know just who has the, I don't mean power, but sort of power in those conversations and when you're actually committed. Okay, the next question. What is the best way to find sellers for a private sale?
So there's a private network. And I will be honest right now, just because there isn't a lot of inventory. But there's what we call pocket listings where you basically still have to work with the realtor, right? A realtor like myself, I have access to the private listing network where, let's say, a seller's working with their agent and they don't want it to go out to the mass system, to the MLS. It goes to specific agents that are part of that private network. So again, it's working with an agent who will determine if there's anything that makes sense for you. But again, the inventory right now is scarce, so it's a little bit of a challenge.
Couple questions about closing. So one of them is, can a lower HOA be negotiated along with the sales price, or is that normally fixed?
I wish an HOA could be negotiated, because I would negotiate. My HOA went up this year and I was a little bummed, but no, that's something that it's part of the association, the master association of the building. I think that's a very important point to factor in when you're looking for a condo. Just because HOAs are not flat. HOAs can go up every year. I mean, a small percentage, depending on if there's any repairs that need to be, it depends on the building. Is the building old, on the older end? Does it need a lot of repairs? So no, HOAs, I wish, but no, they cannot be negotiated. They instead go up. They don't really lock in. Some do, some are very consistent, and you can always ask those questions. I think when you're looking into buying a condo, you need to ask the questions of, what does the HOA cover? Like I mentioned, my HOA, I won't give numbers, but it covers some utilities. It covers a really awesome gym, a sun deck, a pool. So look at those amenities. Look at the reserves, because that's also very important. And what I mean by reserves is, how much money does the association have saved in case something needs like a major repair, like the roof or whatnot, or the siding of the building. So ask those questions. And then I guess always looking at the history of the building too, and ensuring that no specials are going to come down the road. And but yeah, HOA, no, it cannot be negotiated.
And do you have the right though to ask for the last, I don't know, 10 years of HOA fees, just so you can look at that, how much they've gone up each year?
Yeah, that's like a public record, so you can always look into that.
Okay. So other questions about, this is sort of a general question. Are there any hidden fees, and how much are closing costs?
Hidden fees, no, I don't think anything's ever hidden. Maybe it's more a point of like not understanding. Like as a first time buyer, I was like, oh my God, like when I bought, there were a bunch of fees that I was like, oh my God, well, I didn't realize it was so many. But no, there aren't any hidden fees. Like your lender will give you a closing disclosure, which outlines every single fee that is part of your closing, of your mortgage, of the interest. No hidden fees. In terms of the second question of how much money as a down payment, I think that was the question.
Oh, sorry, for closing costs, like how much would a typical closing cost be?
Again, that's always contingent on the sales price. It's a lot of factors that come in. I can't really throw a number out there, because I would be doing everyone a disservice. I can give you my personal, for this condo, I spent about 10 to 12,000 in closing costs alone.
Yeah.
So it's depending on the sales price. It's depending on your lender, who you're working with. But yeah, you need to factor in closing costs as well as your down payment. So you need to have some money in your savings account for sure.
What are some of the benefits or caveats for a buyer in buying a distressed property or foreclosure?
So for caveats of foreclosure, I will say, I mean, I think it's just understanding that it is a bank-owned property, and the process can be a longer process. It can be you're not negotiating with another seller. You're negotiating with a bank. So I think there's a lot of intricacies to buying a foreclosure. It's a longer waiting time. A lot of people jump on those very quickly. So in terms, I would just say it's a process that's a little bit more intense, and it's a longer process than buying directly from a seller. But yeah, sometimes you're getting a better deal from a foreclosure. It's the lack of inventory, and again, a lot of interest in those properties. And again, the foreclosure is a bank still fighting that property, trying to take it away from from the previous owner. So there's just a lot of other variables that come into play.
I'm trying to navigate all of those. Next question. What is the best source to find a good inspector for a home that you're considering buying?
So again, your agent, your realtor should be the best point of contact to send you a couple, referrals. By law, I think by an agent, we're required to send you like 3 referrals, like 3 attorney referrals, 3 inspection options, 3 lender options. So again, it's always for you to just kind of shop around and as a buyer, as an informed, educated buyer, choose wisely. An agent is always there to support and help you navigate, but again, an agent cannot make those decisions for you. But I am always happy to send some referrals. But I work with a couple inspectors. So, and again, Google, always look at reviews. I am the queen of reading reviews on Google. And I think those are very important when you're looking into whether it's a real estate agent, an inspector, an attorney, just looking at their reviews and whatnot.
And if you happen to live in the neighborhood, maybe the next door even too, you could sort of ask neighbors.
Good point. I think it's a good point that you bring up the neighborhood, because sometimes there's inspectors that specialize in a certain village or a certain part of the city. So again, it's always, yes, dependent on the area that you live in. Correct.
Yeah, great. Are there home buying programs for low income individuals? The person was asking specifically for single females. It's a single female, I suppose.
Yeah. I would say an FHA loan would be the best program for low income. Again, I mentioned there's programs that are more specific to low income individuals, programs that help you with your down payment. Let's say you don't have enough savings. Sometimes they'll even make concessions with your credit score. Sometimes it can be even lower than what I previously mentioned. So there are programs for low income, especially if you're a first time home buyer. There's a lot of programs for first timers too.
Great. What suggestions might you have for people looking in markets with rapid turnaround? Specifically, this person said Los Angeles, San Francisco, Bay Area.
So I am not licensed in any other state outside of Illinois, but I think to those questions is, I guess, if maybe for me to understand the question a little bit better, are they trying to relocate or just maybe from an investment? I don't know if it's from like an investment purpose or maybe relocate. Again, if it's a high turnover, I think it's always coming ready with your pre-approval, because properties do sell really fast, especially if it's a good opportunity, if it makes sense, if the sales price, if it's a great location. I think the buyer has to come ready to make that offer on the spot. Sometimes when the buyer, they'll sit too long on it, they'll think about it too long, and then when they finally make a decision, guess what? The property is gone. It's already contingent. I have that with a lot of my buyers when I set them up on searches. They'll get back to me like a week later. They're like, oh my God, I love this property. Like, let's go see it. And guess what? It's already contingent. It's already under contract. So I think just being agile and moving quickly is the best advice I can give.
And being prepared, as you said, having all of your pre-approvals in place and ready to move.
Yeah, that's another thing. That's why we always stress, historically, agents would go and show buyers without even having a pre-approval. I admit that I have done that in the past, where a buyer hasn't even given me their pre-approval, but I kind of started showing them, shopping around. And that's honestly one of the worst mistakes we can do, both as agents and as buyers, because like you said, that means you're not coming up prepared. And if you really like something, it's gonna just delay it even more, that you have to go back to the mortgage lender, give them all the documents that they're asking for you to get that actual pre-approval. So it just delays things more.
Well, and in the current market, you're likely to lose it. I mean, if you don't have those ducks in a row, really, what you're sharing. Can an offer be made without physically seeing a property? And then I'm going to add on in, would you recommend it?
Yes, an offer can be made without physically seeing a property. I had a relocation client from Arizona. I mean, I don't know if he didn't physically see it. I did like a FaceTime with him, and he placed an offer. What I recommended, if you live in the same city and if you have access to the property, no, I think it's always important to go check it out. Sometimes the pictures are deceiving, the videos are deceiving. It's something about walking into a property and the vibe that you get and the feeling that you get also goes a long way. If you think you are set in it and you want it, then go for it, make the offer. Just know that, I think physically seeing the property is always the most important thing you can do.
Has the technology increased with COVID and just our photos and videos and 3D home tours? Is it?
Yeah. So right now, yeah, everyone's doing their drones, virtual showings of the houses, which is an option. Again, I guess to your point about the pandemic and all that, at the start of the quarantine and all that, there were more restrictions. Okay, so it was more of a virtual showing and whatnot. Those restrictions have been lifted. So I would still suggest like wear your mask, go to the property, even if it's just one individual. Don't bring the whole family. Still check it out. But yeah, there's something called a virtual tour that is basically like 3D images of the property, and it makes you feel like you're in it, and you're actually like a real tour of it. But I still think that it's still important to physically be in the property. I don't know, I might just be old school, but yeah, technology definitely has changed. The game of it has changed from the past year. I think it's inevitable. Yeah.
Like everything, right?
Everything from how you sign your documents, like everything's now like electronic. Like you're not physically signing the contract, like everything's like online through DocuSign. So it definitely streamlines the process to like get to the closing table. But I think just the fact that you can walk into your property and like check it out before you place an offer, I think that's never gonna change.
That could be a different session about the psychological benefit
Yeah.
of not signing your name 700 times to get a piece of property versus doing it through DocuSign, but different topic for a different day. Another question going back to closing costs, the person asks, are closing costs part of your offer that's accepted by the seller, or are those costs in addition to the amount the offer of the offer that's been accepted by the seller? So I think they're
So,
saying
okay.
if it costs $200,000, is there additional costs on top of that?
The closing cost is not part of the sales price. So let's say if something costs 200K and that's what you agreed with the seller, 200K, the closing cost is on top of the 200K. The down payment is part of the initial amount, the 200K, but the closing costs are other factors and variables, like you're paying the appraisal, you're paying the attorney fees, you're paying all these mortgage transaction fees. So that is on top in addition to the sales price of the property.
So it's good to think about. So if your budget is 200,000, you may actually need 210,000. Again, I'm making up numbers. So
No, yes, that's correct. Mhm.
okay, great. Another question back to an HOA. What would you think is a good reserve for an HOA that a buyer can get the history on a major repair? And can the buyer get history on major repairs and costs paid by the association?
Yes, you can request that. Typically, that's requested when you're already under contract, where your attorney will request like what we call minutes of association meetings, history, what special assessments have been conducted. Are there any in the near future? In terms of reserves, again, it's always contingent on. It's gonna vary from a building with three condos to a building like mine, which is over 150 units or 150 condos. So I think it's safe to say that, I mean, eh, I would look at it more so per unit as opposed to the overall. So like I would say 10 to 15,000 per unit to have as reserves is a good benchmark. Again, it's dependent also on, is it a newer building? A newer building is not going to need too many updates, or is it a building like 50, 100 years old like mine that may need more updates? So there's a lot of factors that come into that.
But to your point about doing homework and seeing, when was the roof last replaced, or if it's a brand new building, was that 3 years ago or was it 20 years ago? Because those things come into play.
Yeah. Oh, one more thing I forgot to mention is another good question when you're looking into condos. Let's say that you plan on renting it out or like making it an investment in the future. Ask the question if there are any rental caps in the building. Sometimes there's a rental cap where the building will say, okay, only 50% of the units can be rented, or only 25% of the units can be rented. So if you plan to live there forever or until you sell it, great. But if you think that you might want a condo that you can rent out in the future, make sure to ask the question about the rental caps.
Oh, great advice. Another question, considering all the costs involved with purchasing, if you're only going to live in a particular city for a year and a half, would you recommend purchasing a property as opposed to renting?
So a year and a half, I think I'm giving you my most sincere advice. If you plan on selling it after a year and a half, I don't think you're going to build that much equity. If you plan on maybe renting it, yes, I would still buy it and make that investment. But if you think you're just going to own it for a year, I always say it's good to at least own a property for 5 years in order to build equity on it. And then to make up all your, you have to think about all the closing costs that you put into it. So yeah, I think a year, if you're gonna rent it in the future when you move out, yes. If not, I don't know. I think it might be too much trouble for just to own it for 1 year, and you're not really gonna make any profit off of it.
Yeah.
Yeah.
I think this might be our last question, but Angie has very graciously agreed to answer any questions we weren't able to get to on this session, and we will post those online at our website. And thank you to our audience for all the wonderful questions that keep coming in, but we do want to be sensitive to time. So let me ask this question and then we can wrap up. Do you recommend writing a home buyer's letter to a seller? And if so, what would that include?
You know what? It's interesting that question comes up because I have had buyers who have written what we call I think a love letter. There's a term for it, a letter to the sellers. And sometimes it's worked very well. Like the offer has been accepted just because, as a buyer, sometimes you don't have too much of an opportunity to show the seller that, you fell in love with the property, or that you see this as your future home. And but then there's also another side of things where people are starting to think that those letters may lead to racial or discrimination. So profiling, discrimination. So I think there's a fine line with, I still think a letter, writing a letter to a seller is a good idea. I just think that sometimes not going too much into the weeds or too much into detail, just to eliminate any chance of discrimination.
Oh, interesting. Thank you for sharing that. I had not heard that. Angie, thank you so much for answering all these questions, and thank you to all of our participants. And again, Angie has agreed to respond just in writing to some of the additional questions we weren't able to get to, but thank you so much. We're so proud that you're a graduate and hosted the session for us today. Just to quickly wrap us up, please join us next week as we have 2 alumni exchange programs coming up. First, on Wednesday, March 10th at noon Central Standard Time, when we will be joined by UIC professor and head of the Department of Communications, Zizi Papakarisi, as she discusses social and political consequences of online media as she presents the trust deficit. And then the following day, on Thursday, March 11th at noon Central Standard Time again, we will also be joined by 2 UIC faculty experts who will present what does defunding the police mean in schools. This interactive discussion, they will talk about how policing happens in schools and what a police-free school could look like. To find a recording of this session and all of our sessions, please do go to go.uic.edu/alumni exchange. And of course, as I mentioned at the beginning, please be on the lookout for our survey. I know that we are joined by many recent graduates today, which we're so excited to have you as part of this program, including the chair of our recent graduate or student to recent graduate alumni board committee and several committee members. If you are interested in volunteering and getting involved with your UIC alumni board, please go ahead and check us out online at go.uic.edu/alumni board. Thanks again to all of you for joining us. Thank you to Angie for all of this wonderful knowledge you've shared with us and for your time and talent. Again, we're so glad that you are a UIC graduate. I hope the rest of you all have a great day, and we look forward to seeing you again in a future UIC Alumni Exchange program. Thanks again.